All right. Welcome back to Dominating Your Investments. This is Dominant Rinaldi. I have a special guest today. I have Dillon, Mr. BluSuit Dillon from Twitter, for those of you who know him. Hope you follow him. If not, I believe the exact is at BluSuit Dillon. Good friend of mine on FinTwit. I mean, I see him talk about digital Turbine and Palantir and a lot of other stocks that I'm very passionate about. And we're just going to talk stocks. We're just going to keep it casual. Just really talk about what we love. And we could do this for hours, but we'll respect your time, listeners, and we'll keep it to an hour. We'll keep it to an hour. And we're just going to talk about what's going on in the market. You know, we had some great earnings from Trade Desk today, a lot of other earnings last week, and we still got more coming on the rest of the week. So I got my coffee, I got my bourbon. He has his water. We're primed, ready to go. So, Dillon, why don't you just give the audience a little synopsis about yourself and how you got started investing, and we'll just take it from there.
You know, we had a short conversation here before we started recording about, you know, why we ended up getting started in the first place. And for me, you know, I'm not sure if you've ever read Rich Dad, Poor Dad. It's kind of the classic, right?
I haven't read it yet. I haven't.
Got to get around doing that. So I think I really just picked up that book one day, and it was actually an audio book, and I'm in outside sales. And I just started listening to Rich Dad, Poor Dad while I was driving around from office to office. So, you know, obviously when I went on into the next office, I'd pause it and then come back into my car, start driving, and I'd listen to this book, and it opened up my eyes to what wealth really is and what financial education really is. So what I ended up doing is, you know, I think I started the Twitter alias. I've always been on Twitter, and it actually says that I started in 2010. So I've always had a Twitter, but I switched around my alias in August of 2020, around the pandemic, like shortly after the pandemic. And, you know, I was following a lot of people on Twitter, and this is when I really started getting into it. And at first I didn't even go into it thinking I was going to be a content creator in the first place, but I saw people buying crap companies constantly. And I just kept thinking to myself, I'm like, oh gosh, this isn't going to end well. So I just started posting on Twitter, and don't get me wrong, by no means do I have all the answers. And I learn every day. I think that every great investor constantly learns and tries to get better, but I just started posting on Twitter and really just setting out, and I had a mission, and the overall goal at the end of the day is really just to help people make money in the stock market. So, you know, I don't even really know my portfolio returns, but I think this year so far, I'm up, I don't know, 70 something percent. We had a good day today, probably 75% year to date.
And it's been a tough market this year too. So that's fabulous.
But it's, you know, I think that what I really focus on, and I think where I get my niche and my niche audience from is really, you know, 80-20. So it's 80% fundamentals and 20% technicals, and really trying to make sure that I can understand each business and, you know, like understand Digital Turbine, right? So we both love Digital Turbine, and really understanding like, where have they been? Like, what's the story behind this stock? And not only that, but like, where are they going and how are they going to continue to grow their revenue and earnings growth? And like, what's the long-term thesis behind that? And Palantir as well. You know, both you and I think that's how we really connected in the first place.
I think that was the one. We're both super bullish on Palantir.
yeah. Palantir, it really is like that next generation space software company, if you ask me. Like, it's going to just be a big part of our future later on down the road. But more or less, yeah, I ended up really getting started. I just want to help people. You know, really just try to spread the knowledge, spread the information. And if I can get somebody help somebody pick a really good stock or really help somebody out manage their portfolio, that is more rewarding to me than any dollar figure. That's for sure.
Yeah. We share that passion. I think there's others in the FinTwit community you can see who's extremely passionate about just talking about stocks all day. I'm a little jealous for some of you guys who are able to tweet a little more than I am. Depending on the schedule of our jobs. But the community's, you know, very tight knit, right? And I think everyone for the most part means well, right? I do always talk about how there's others who get upset when you don't like their stock, or you may not even know enough about their stock to say, hey, it's in my top 10, but there's so many stocks and good companies that are out there. There's also a lot of
Yeah.
bad ones. And there's a lot of ways to win in the market. So maybe you could elaborate on the 80-20 rule. And we were just talking about how you mix technicals with fundamentals. I'm looking here at a screenshot for your pinned tweet from October 27th around the style of companies that you pursue and when you try to get in and find them in their life cycle. And I find it interesting because I would love to know how to get more into that first entry phase, is where you kind of have your arrows poured in on before they're kind of fully discovered by institutional money, is what I would guess. And so, yeah, just would like to understand, some of the things that have allowed you to get in on, because I look at your portfolio and you have a lot of companies that I know you got in very early on and are not afraid of risk. So maybe you can just talk about that.
Well, I would never really consider it risky because a lot of people use charts to guide their direction. But what I really look at it is I really just look at the fundamentals, and all I'm really focused on. And if I really had to break down this investing strategy, it's all about growth. But there's different types of growth and growth stocks. So like you look at a company like Skillz, and they consistently release great growth numbers. But the problem is that when you dig into their business model a little bit more, you start to understand that they're essentially their sales and marketing expense is just incredibly high, which says that they're buying their way to that growth. And there's a lot of other companies that are doing that. So it's really broken down into the numbers. I think the best way to really describe this is going to be to tell a story, right? And one stock in particular I can really talk about is Fubo, that a lot of people think that that's a risky stock. But when you really dig down deep into Fubo and you start to understand the trends that are going on within the numbers, they call it their adjusted, I think they call it their adjusted contribution margin or something like that, but it's basically their gross profit margin. Like,
Mm-hmm.
what are they making per subscriber and how much money is that consistently going up in? So when you think of Fubo, when it first IPO'd, I saw that it was a sports first streaming company, and I was very interested into it right off the bat. And I was just like, okay, this is very unique. There's no sports first streaming companies out there. But then I had to think to myself, okay, well, there's YouTube TV, there's Sling TV, there's Hulu.
Yep,
Yeah,
yep.
Hulu.
There's tons of them.
Yeah, so there's a lot of other companies that are out there, and you have to think to yourself, okay, so how are they going to find their competitive niche? And what they've really done to start their brand is that they cover soccer. I think Europeans would call it football, and
Most
but us
popular
Americans,
sport in the world. So it's not a bad
exactly.
sport to pick if you're going to start covering one.
Correct. So they have exclusive content rights, and I think that this is just back in spring, and I think they're going to crush their earnings. But it's CONMEBOL, I think that's what it's called. But they really started with soccer is how they ended up getting their niche in the first place. And then you start thinking about, okay, well, that's very interesting. What else? How are they actually going to reach profitability? And you can see that their growth numbers and their subscriber count continues to accelerate, or even just maintain growth. So their ARPU, their advertising growth, and as well as their subscriber related costs is starting to come down. So they were originally losing, I broke it down, about 6.5% per subscriber. Now they are losing 4.5%. So that's going to be 200 basis points year over year. So what that tells you is that they are slowly making more money on their subscribers. Then they add that advertising revenue to that to increase ARPU. But this is where things really get interesting, right? So you know that Fubo is a money-losing company. A lot of people think it's risky. Then that's when you have to think to yourself, okay, how long do they have with their current cash burn to stay alive as a company? They recently did an offering, and you can actually see, and I've been tracking Fubo's market cap, and I anticipate on them releasing not too long that they'll actually say that they finished their secondary offering. So they're not offering any more stock, and they increased the cash on the balance sheet up to about $900 million. So what this tells you as an investor is now they have $900 million. Let's say they're burning about $30 million in cash. And that was every single quarter that they were doing that while they were launching their sports book. They just officially launched their sports book, right? So now you think to yourself, where is Fubo going? And what can we anticipate for the earnings report? Because the earnings are going to be tomorrow. If they ended up releasing and they provide guidance on the sportsbook ARPU, as well as advertising, how is that contributing to the ARPU? And then also, how is their subscription costs? How is that costing them as well? And then what you start to see is that there's a very clear path to profitability. And now with every single stock, it doesn't matter what they do. It doesn't matter, because at some point, there's a lot of stocks that will crash and burn if they don't have the path to profitability. So every single great growth stock out there needs to have two things in common. They need to be growing very fast, or they need to be on the path to profitability or already profitable and growing earnings quickly. So this is really where I find out a lot of those companies. And Agrify is actually going to be another one, which is a $200 or $300 million company. And this is the same story here where, and I think I bought it at 13 and it just traded up at $22 per share today. And Agrify is going to be another one of those companies where I found it very, very early just because they had high revenue growth. And I dug deep down into the fundamental story to get a better understanding about where the business is going long term. How do they fall in the competitive environment? And then also get a really good understanding of what the business model is and what their plan and path to profitability is. And if you figure all that, if you figure out all those fundamentals, and if you really are able to put together a story and a really deep fundamental understanding of the business, then this is really where you start buying stocks very, very early. And more importantly, this is where you're going to get the biggest returns. So I think that on October 27th, you can see that there was a couple stocks in there where I have over 100% returns. And I think now I have Silvergate, that's going to be on there too. DigitalOcean's getting close as well. Agrify is getting very close. And there's a couple other companies in there. And these are just stocks I picked this year. But that has a lot to do with how I really fundamentally look into these companies and the questions that I ask myself, and having to make sure that I understand the business at just a very, very high level. So, really
maybe walk us through.
Go ahead.
Maybe walk us through when you say how you do your due diligence and research these companies. Are you looking at CEO interviews on YouTube? Are you looking at Seeking Alpha for other writers? Do you have subscriptions to certain stock recommendation sites? Like, or it could be a conglomerate of those things. I know that my research process consists of all of that. So, I'm looking at your portfolio, and I definitely see some up and coming tickers that not everyone would be aware of, but that have deemed great results. So we just maybe like to understand how you're screening for those and kind of identifying and then diving deeper.
Yeah, so I think FinTwit is going to be one of the best communities, just following a bunch of people that really like to talk about their stocks. And I can tell pretty quick about who's a good stock picker and who's not, just because of the companies that they're picking. So there's a lot of people out there that just love to pump stocks, and they don't really care. They don't really care about what their followers may or may not think. And sometimes they have 40, 50, 60,000 followers, and they're just pumping stocks all day, But there's going to be a lot of other content creators out there that love to talk about their stocks and just share that they have a new good idea. And these are typically the people that I really like to follow. So FinTwit, I'd say, is probably where I get about 60% of my ideas. And then I'm a subscriber to Seeking Alpha, and I consistently scrub that as well. And I check a lot of the new IPOs. So I think Amplitude is another really good one. And I released a write-up on that, and I ended up buying it shortly after it IPO'd. I just made sure that I held on to it long enough. And then Global E. So I bought Global E, originally started buying it at 27. And it ran all the way up to $70, but that's just because I was aware that the IPO just happened. And I said, okay, how can I research this company more? And there was a really unique story in there. And then dLocal was another one. So, I mean, it's all the same thing. So it's FinTwit, Seeking Alpha, IPO. So like, I always make sure I track all the newest IPOs that are coming out. I don't track SPACs as much as I used to anymore, just because I think that a lot of the CEOs lie and they try to paint a story. But the thing is is I'll go through and I'll actually read a lot of those 10Qs.
There you go. Yeah.
Yes.
Yeah. A
So
lot of people don't do that. I'm still kicking myself when you mentioned Global E, because
yeah,
so many people on so many podcasts talked about that one. I believe Shopify has a 5% ownership of them.
almost 10% now, I think.
10% now. Yeah. I heard about it when you're talking exactly when you were like in the 20s. I thought for sure Shopify was just going to buy them out. And so didn't dig in deep enough, and that thing ran so fast.
Yeah.
It's just like, wow, okay. So not to say that it's not, you can still get in if you're a long-term investor on good quality companies when they run fast, but it does mean something if you can get in at an earlier point when you look at the power of compounding, right? The difference between getting in at $20 and $70 and your compounding rate, holding it for 10 years, that total is going to be completely different.
Yep.
So when I look at that, I look at some of the other ones you have here, and that's another one that jumps out of me is C Limited. And I remember where I was when I was looking at my computer and I saw the recommendation from one of the services I had. I seen it all over Twitter, and I was like, oh, that must be a Southeast Asia, that's a Chinese stock. I don't know. they don't disclose a lot of their stuff. You can't see what's really going on financially. It is a crapshoot. That is too risky for me. So no, thank you. And then not even doing enough due diligence to dig in a little further. I kept hearing Joey Salitro talk about it on Motley Fool on the podcast, and dug into it, and it's not China. It's Singapore. Yeah. And so once I read up and learned from all the different FinTwit write-ups that I've seen on it, and listened to Forrest Lee, and then learned his story. Shout outs to From Growth to Value, who covers the stock exceptionally well. I was like, I got to get it. So I got in at 140 thinking, well, I'm getting in high, but I still think this is a 10x from here. And it's one of those things where you have to hold for a while. You have to be able to just, and that's the beauty of C Limited, is like what I did notice, and me and Tony from Pounding the Table talked about this, was when big hits happen in the market, some of your best stocks will hold their institutional strength, and you'll know that they can endure the storm, and that those, when they do have their news and they do have their catalysts, boy, you better watch out, because they're going to run. And you may get a couple chances when it goes down 10, 15%, but that may be all you get. And you just have to keep adding and keep building, making sure your thesis is intact, and the power of compounding will take care of itself. That's what I did with Nvidia. Nvidia, I got in at 144 when we were going through all those tariff issues and fighting over, what we were going to do with China on that. And it was affecting them very heavily, as well as Xilinx. Xilinx lost half of its value right off the bat. And I still hold. I haven't sold either, any shares. And now my Nvidia is like a 7 or 8 bagger, and my Xilinx is a 3 bagger. And so, nice. And I just, while doing that, you make sure your thesis is not changing. Like, okay, the leadership is not changing, the product development, the growth, sometimes there's going to be catalysts and that quote from Buffett is so true, that initially the stock market's a voting machine.
Yep.
But at the end of the day, give it a decade or two, it's a weighing machine. And that's where you see a lot of these other companies that may go run, in the world we live in now, 200, 300% in a year. And you're like, that's not normal. And then they come all the way back down to earth, and sometimes even crumble. But those that grow 20, 15% annually, year after year after year. And it's just like, Adobe's a great example. I don't own any shares of Adobe, but that would be a great example of a stock that it's not going anywhere. It may not be exciting to follow anymore, but they are going to continue to compound, right? So I just look at your portfolio, and that's definitely one of the things that jump out at me. I have to ask, go ahead.
Well, I was going to just say that this is what a lot of investors, I say investors, not necessarily traders, because traders usually have their own system. But a lot of investors overlook the two most important things that contribute to any share price: revenue and earnings. Like in every single, in the best investors in the world. So even like How to Make Money in Stocks, and we were just talking about how I was reading that book. Peter Lynch, who is an award-winning, not necessarily an award-winning, but like
one
one of Wall Street's. What's that?
He's one of the godfathers of investing.
Yes, exactly. And even Warren Buffett. So all the best investors and the best traders, they all do the same thing. They focus on revenue growth and earnings growth. If the company is even like negative earnings, if they get a little less negative earnings, that is still earnings growth. So if their EPS, like let's say it's negative 45 one year, and then all of a sudden it goes to negative 20 the next year, well, that's still EPS growth. And that's all that matters to these institutions. And then if you think to yourself, like, how do stocks move in the first place? Institutions need to buy them. And they're not going to buy them unless there's revenue and earnings growth and there's profit behind it.
No, I definitely think the institutional ownership gets overlooked.
Yes.
I would also say institutional ownership can be manipulated in the fact that those who have money in the market, there's always manipulation happening, whether you think it or not in retail. I honestly think that's one of the advantages we have as retail investors is my timeline is not 90 days. My timeline is not 12 months. I don't have to rebalance my portfolio. So if my thesis stays intact, I'm sitting fine, right? And I can also afford to get into a small cap company, which I think is a perfect segue to talk about Skillz, and buy the stock when it goes public and keep adding, whereas institutional will hold off for a while, right? And they typically go for larger and mid cap companies that have earnings and growth. Or there's a stipulation of what's going on in the media like Palantir, and it's misunderstood and people stay away from it. I think that creates generational buying opportunities for retail investors who do their homework.
I agree. And I think Facebook, otherwise known as Meta, this is the unique thing is I don't like Facebook just as much as anybody. And I'm pretty sure that that's why it trades at a discount on a very broad basis. The forward PE right now is somewhere like 22 or 23. And when you have a lot of its other peers that aren't growing even as fast, you got Apple trading at a forward PE of like 28, 29. I mean, sure, valuations are historically high right now. Google's the same way. Microsoft's trading at a very heavy premium. And you even got Amazon there too. Tesla's trading at a forward PE of, I think it's a little over 100 now. But maybe it's even close to 200. But you got Facebook that's trading at this 22, 23. They're changing their business model. That's what a lot of people don't necessarily know about the name change. It's not the name change that made me want to buy it. Mm-hmm. It's the fact that they are a misunderstood company, just like how you said. And what they want to do is they want to become something new, and they wanted to change the name to make sure that they transition into becoming a new business model.
Yeah, and that kind of leads to the topic of, and we can start getting into some earnings too, and just open discussion on some tickers.
Sure.
Of optionality. Like when I look at company, I look for sustainability. I look for high revenue growth and high gross margins, because if they're not profitable, I want to understand that their business model allots for them a path to profitability.
Yep.
I'm heavily invested in founder-led companies. I think when I looked at it, 95% of my investments are founder-led companies. I think that ultimately, when we invest in stocks, we're investing in people. That's what we're investing in. You take Elon Musk out of Tesla, it's half its valuation. You take Bezos in his prime when he's building out AWS with Andy Jassy, half its valuation, right? You take Jensen out of Nvidia, good luck, right? So, and the cultures that they cultivate, right? When you look at Glassdoor and look at Nvidia, how many times they've won top 10 company to work for or best CEO, that tells you so much more than an earnings report or revenue growth, in my opinion. because that tells me their employees are invested, and they don't even give a lot of stock out at Nvidia, right? And they have such high reviews and high regard for the culture and what Jensen's built there that people stay a long time and keep their talent. And then you look at someone like a new up and comer, I won't say new, I say new to the public market, Palantir, who's done stock-based compensation to keep that top tier talent for 18 years now. And is scrutinized because they're not profitable, but you take that SBC out of it and they are profitable. But what a brilliant way to compete against the Googles, the Facebooks, the Microsofts, because they have more money, they have more cash. Apple has more cash than most countries, you know? And so understanding that logically and just looking at it straight for what the facts are, people miss that that's a winning culture, that's winning leadership, that's protecting your top talent. And at the end of the day, everybody's fighting in technology for the top 1%. They don't care about the top 5. They want that top 1 that's going to create that new generational patent or technology for the company, right? So I think that's just so overlooked. And then I look for reinventing itself, or even taking a SoftBank approach of investing in other companies that can make it either more profitable or more revenue, or just ultimately change the networking effects to where it's so sticky, it adds customers, and the switching cost is so high, forget it. I'm just staying with it, right? I think Palantir checks all those boxes, and we won't make this a Palantir episode just because every episode of mine's almost a Palantir episode. Yeah. But we could talk about the same thing for, you know, several other the tickers you have here. We could look at C Limited. I mean, C Limited is not stopping. C Limited has their fintech arm. They have their e-commerce, they have their gaming that's funding all of the margin and all the cash flow, very similar to how like AWS was funding Amazon and being that margin cash cow to grow the business. And now they're getting into AI because they understand that's going to be one of the most important facets of our world for the next 10 to 20 years. They have CAI and they have C Capital because they're helping Southeast Asia, who's not banked and needs finance, to understand that they can be the bank, right? They have enough cash. If you have a great idea and you're a business, I will fund you, but I will want shares. I will want ownership of your company, or we'll work something out. And they're even doing food delivery, right? You know, in certain areas. So that to me, and doing it at the speed that they have done it on, and execution on beat raise, beat raise, beat raise. I don't get caught up in the earnings so much, as far as like, if you miss, you miss, but I just need to understand the miss, right? You look at Amazon, Microsoft, Apple, they've all had times in their careers of being a company that the stock has dropped 50%, 70%, 30%. Do you understand the company well enough? And have you done enough homework that your earned conviction allows you to say, holy cow, I'm going to buy more? You're kidding me. At 50, when Skillz went to $8, I said, you know what? I got to buy more. And I know a lot of people feel different about, I'd love to hear your take on Skillz. I don't know if you still hold it. But even though there were certain pieces that still rubbed me wrong, as the understanding of how they were delivering the business in those earnings calls, and, you know, raising only $1 million up on your call, things that just were, you could tell it was a company trying to find its way and never been public before. And we're seeing that. But the concept and the valuation was so undervalued. I was like, $8 a share. It's growing 70% revenue. And even if it's buying its customer, that's how Amazon started, was buying its customer base. Now they do have to have Archie turn it profitable. They do have to lower that that sales and general expenses, right? And we also saw just recently, yesterday or today, Andrew Paradise buys 432,000 shares. So that gives you confidence as well. But I've given that stock, because people ask me all the time, like, oh, you're still holding your shares? Yep, still holding my shares, haven't sold any. I'm down 50% on my investment. So you can all say, hey, what an idiot. But I invest in companies for the long term. And so my thesis is still intact. Nothing's changed, but we were given commitments by the CEO that they would be in India by end of Q1. Okay, so we have 2 more quarters. So are they going to be in India, which is one of the most populated mobile user countries in our world, and growth out the wild zoo? And we were also told that they would execute the Big Buck Hunter and it would be a success, and it has been. It's actually their #1 game now, and it has gotten a lot of success on their tournaments and revenue. And then they said that they were going to have an NFL game next fall. So for me, I want to see a NFL game that was worth all that hype and all that marketing and everything else, that actually shows that developers are wanting to put their games on this platform, that then tells me they will be successful long term. If they can't put a game that I'm more familiar with, or have a created game that is a huge success, a phenomenon, like the next Candy Crush, then if the financials don't look much better come the end of next fall, I'm out, selling all my shares, because that would have held it for 2.5 years. And at that point, then I kind of feel like we've been lied to if we haven't either improved financially or we're executing what we said we were going to do. What are your thoughts?
So I held Skillz for a while, and think this was in the beginning of the year. And then my original thought behind it was very similar to yours. I was enamored by the ability to change the way games are monetized, because that's essentially what Skillz is in the business of. Skillz is, a lot of people like to think of it as, you pay to play. Mm-hmm. That's wrong. No, it's a new way for developers to make money, game developers. And Skillz customers are actually the game developers and not the actual users or the paying monthly active users. When I started to figure that out, I thought it was very interesting. And I wanted to buy more Skillz. And especially when Skillz first de-SPAC'd, it ran from
it went from 10 to 46.
Yes, all the way up to $46. That was insane to me. And I was very, very excited about the stock. I thought because it had 95% gross margins, that it had all sorts of great stuff going for it. And then I started to look more into the financials, and I started to play the games to understand it more, because there was that short report that came out. And then this is where a lot of my concerns came from with Skillz. And I hope I don't talk you up your position when I start saying this, but what I started to figure out is there's this thing in their platform. It's called bonus cash. And then also their prizes. So this is where their sales and marketing expense is so high. So ideally with bonus cash.
Let me guess if I can guess what you're going to say, because I think I know. With me as a user, if I leave that platform, they will incentivize with bonus cash or rewards to say, hey, here's $10 to play, to bring me back as a customer. Is that correct?
Yes, but you can also get it. So I got into playing Big Buck Hunter for a while, and I started to figure out that if I just played, I would also win bonus cash. So if I won the games, then I would start to win. And then I was also awarded bonus cash very, very often, to where I only made one $10 deposit and then ended up building it up to about $30, $35. Obviously nothing too crazy, but I didn't have to put in any more money. That means that Skillz is putting money into the ecosystem mm-hmm. with bonus cash. Mm-hmm. They are realizing this bonus cash as revenue. I only put in $10, and they are realizing this revenue through bonus cash, and then that's what's coming out of the sales and marketing expense. So when I consistently see the sales and marketing expense very, very high, this tells me that they are consistently putting more bonus cash into the system, making it artificially look like that they are growing their revenue very fast. But in all actuality, they're not. That's why you see their paying monthly active users kind of stagnating. And then also their monthly active users stagnating as well. Now, there's one big catalyst for Skillz, and that's that they can finally create a game that's going to be worth something. Because all it takes is one Fortnite. All it takes is one Candy Crush. Right. Because that's exactly what these real good, for C Limited, they have League of Legends, and then they also have Free Fire. And both of those games are Rockstar. And these are the kind of games that really a lot of these game developers can actually monetize. But in this particular instance, Skillz is nothing more than a platform that's struggling to find its game of identity right now.
No,
And
that's fair.
in my opinion,
fair.
It's a very, very dangerous investment at the moment, because if they run out of cash, and they only have probably 550, 600 million now. If I didn't look at it, this latest quarterly report,
It's about
but,
right, 600 million.
Yep. Every single quarterly report, I look at it and I look at that sales and marketing expense in terms of revenue. And I say, nope, you're buying your revenue, because that's just what we consistently see. And then the more money that they have in the Skillz ecosystem, because you can transfer it over to like the bubble game, because I was playing the bubble game there for a little bit too, like Bubble Burst, I can't remember. Then also I had that Big Buck Hunter, and they would also be able to transfer over to different platforms, different games, all on the Skillz platform. So that was really fun, but it's that bonus cash I just can't get over.
And I heard from you more detailed version of that than what I've heard on other podcasts and people talking about on YouTube. And I would say you're spot on that. And that's why it's, one, down 50% on my investment, but it's still in my top 10 barely, because it has taken such a big hit. But if they can get a game or two, it changes the thesis very quickly. Because then you don't need to use bonus cash. You don't need to use any of that. The whole idea of my thesis originally, and still is if they just get one or two games or somehow strike up a partnership with a big developer, then all of a sudden, now you have what I want to play. And you're telling me I can play Dillon at Madden and whoop them and get $20. Like, yeah, let's go. Like, that's what my thesis was let's monetize. And then they talked a lot about monetizing exercise, which I think is brilliant. Like, if they figure it out, like, hey, I beat you in steps this week, I get $5. Like, you think about the possibilities and the possible optionality. Now, does that require a lot of execution? Yeah, it does. And they have to start innovating and doing that. The first step is getting a real big game. But I totally get your concern. And that's why it's not my top, 5 investments. But I did sink a lot up front. Had I understood maybe what you understand now, I probably would have sunk as much. I'll be honest.
But here's the thing too, is that Skillz also has another unique opportunity. Is remember the business that Skillz is in is to enable monetization for game developers.
Mm-hmm.
So this means that a lot of those like Clash of Clans,
mm-hmm.
Clash Royale, these are phone games that I think even a lot of millennials play to this day.
Yep.
Or you can think about Fortnite. You can think about Free Fire. If a lot of these other developers want to start actually creating new monetization efforts and run it through the Skillz platform, they can do it. Because what's unique about Skillz and their competitive moat is actually going to be their security system. So that's where they're really, really strong with. So they don't necessarily need to create their own game. And
right. No, I'm sorry. I misspoke. I just meant get a major game. They're not the creators of games. Now, if they want to get into that, great. But the whole point is they're not having to deal with all of that SNGA and R&D development for a game.
Yep.
They just got to find people to put their game on their platform.
Yep. So if I was Andrew Paradise, and hopefully Andrew Paradise is listening to this, I'd be looking at trying to create a partnership with one of the larger games that already exist out there. Because imagine if you could play Call of Duty on the Skillz platform. Same capabilities with Call of Duty already. Everyone can do their $5 buy-in. Let's just say that
it changes the whole idea. Like, I mean, I get excited. I'd play Call of Duty again,
because now you're playing for money.
Yeah.
Now you're competing and you're in tournaments and you're playing for money.
There is something to be said about putting a little skin in the game with your friends and trash talking and doing all of that. Now, granted, I have 2 kids and I don't get to play video games very much anymore, but it definitely it's a unique investment. But to your point, you got to do your homework to understand how much risk are you willing to take on.
Yep.
And it looks like, do you hold about 26 stocks or maybe even a little more than that?
I want to get it down.
Yeah.
And I went into this earnings season fully anticipating on getting it down. I think I've sold DraftKings.
I sold DraftKings too this time. I closed it out. I
Yep,
put it in Palantir.
I'm done with DraftKings, and it's not that I don't think that it could potentially be a good long-term investment. It's just I think I'm one of the only people on Twitter that keep pounding the table on Fubo, right? Because I'm right there in Beth's camp. You know, she picked Roku pretty well.
And hold on, for those who don't know Beth, most you do if you're on FinTwit, but Beth Kindig is one of the best software investors out there. And so she called Fubo and Roku way early. Sorry, go ahead.
Yep. So the uniqueness with Fubo is that, and this is the bull case behind it. So I talked a little bit about the margins, right? But then you also have the uniqueness of owning the audience through your streaming device. So when you have these sports first people that now you have their email address, right? So they even said on one of their calls that what they're actually going after is the casual bettor. So like, let's just say you and I, Dom, we're hanging out, we're drinking a couple glasses of whiskey, right? And we're watching our favorite sports team. For me, it's Minnesota Vikings, which is very unfortunate, right?
For me, it's the Cowboys. So we both had a rough weekend.
Yeah. But what we could do is we could even bet against each other on Fubo sports book, saying, you know, I think that this is going to be the next play. Like, I think that the Vikings are going to miss a field goal. And I'll say that as a Vikings fan, I could place a wager on it and actually get paid out real time while the game is playing. So you can make bets on plays. You can, and this is, so the proprietary technology here is that Fubo is not necessarily in the business of just sports. They are in the business of interactive TV. That's what they are trying to create. They find a way to monetize it through sports wagering and being a sports first streaming service. But later on down the road, you can have these girls get together and they can do wagers on bachelorette parties or even play.
I knew that's where you're going. I knew what you were saying. I was like,
yep. You can play any one of your reality TV shows and do that.
But right now, it's all sports, right? That $65 a month is only going to get you sports, right?
No. So you can get everything. So like I even pre-record Shark Tank. I watch all the football games.
So for $65, you get all of that?
You get live TV. So what they do is they partner with the other broadcasters that are out there, like Fox, ABC, all of them, right? Okay. I don't even know how many networks there are out there.
Okay. Interesting. Well, I knew Beth was into it and got me excited. So you definitely have had me to think twice and have to do my homework. I like that idea of, now what's stopping DraftKings from having that interactive play? Because they have partnerships up to the wild yin yang with Disney and ESPN and all of that. So they
originally, because I owned DraftKings and Fubo for a while, they originally actually ended up announcing on their last quarterly call, not this recent one, but the one before that they had a lot of opportunity and content and like basically doing what Fubo's doing, right? So having sports streamed directly on their DraftKings sports betting device, and they actually created a partnership with the MLB. The difference is the process of what they're doing it. So they created a sports betting, fantasy football, gambling application first, and then they want to try to integrate TV within it. Fubo did it the other way around. They created the TV to get the subscribers to come to them, and then they're going to try to have them, like, I don't even say that they're necessarily wanting to push, because it's only going to be available in select states that they can get full legalization with. So right now it's just Iowa.
The whole idea is that we think that, you know, electronic betting will eventually be fully legalized in the US, just like cannabis, right? I mean, eventually the states need tax money, and it's a lot of tax money that they can get. You know, what interested me about DraftKings was not only were they first to market and they were the name brand that everyone recognizes sports betting with to some degree, or FanDuel. But I experienced their platform. It's a great platform. Was that when COVID hit, they got creative and they started doing betting on people playing esports like Call of Duty and stuff. And that was like, okay, to be able to pivot this quickly and to get people to watch esports and bet on it and have a platform and technology able to do that, that was where I was like, okay, there's a lot of optionality here. I think what I'm doing is what you're doing. You've done a better job of it with only 26 positions, is I'm consolidating down, and I want to get to, if I get to 25, I think I'll be thrilled. 20 ideally, but I have 77 right now. So we're chopping away. And just so you know, folks, because I know I'm going to get DMs after this about 77 positions. My top 20 make up 90% of my portfolio. So your winners win, right? That's just the natural. Naturally, if you hold your stocks long enough, you will have a consolidated portfolio of what matters. But I have to want to follow the stock. And there were just so many other stocks that were closer to my area of expertise and things that I got excited about, and that weren't necessarily dependent on a cyclical season or the behavior necessarily of humans having this need to gamble or do something psychologically. Does that make sense? Like, so for instance, I closed out my position. I put all that money into Palantir because what are some things that we know you cannot refute? You cannot refute that by 2030, we will have 10x the data we have now. Actually, it'll be more than that, right?
Yep.
You can't refute that 50% of the data in the world is going to the edge computing in 2025. You can't refute that 90% of data is not even being utilized within enterprises because they don't know how to use it and bring it all together and make decisions. That excites me because I live in that world, I work in that world, and there's so many possibilities when you look at data. Doesn't mean that DraftKings can't be a 5-bagger, 10-bagger, whatever it may be. But my confidence level and my conviction and the amount of hours I've poured into Palantir and how I can literally tweet about it every day because there's something new they're doing. It was easy to just take that money and put it in something I love. If we had a couple stocks that we'd wear jerseys of, I'd have that black and white, man. I'd have a badass Palantir jersey. It would be sick,
Yeah.
So it's tough though, isn't it? It's tough trying to narrow it down because we love this. We love investing. I find it so fun to, find a company at what you've done in the small cap or micro cap level and watch it grow. I was blessed and fortunate. My two, I call them my lucky ones because you gotta be humble, right? In investing. Yes. There's luck involved with this. I don't care what anybody says. No one could have predicted that Trade Desk goes 30% today in one day, right? No. People were short selling that crap and bringing it all the way down to $69 a share on Friday. And I had a sticky feeling.
Don't bet against the Trade Desk.
Yeah, you so can't dumb. Bet. I said sticky, sneaky feeling that Jeff Green was just going to blow it out. And he, knew IDFA and he knew about how to combat that with his UID 2.0. They're in China. They're heavily embedded in China too. He was getting into there way early and has partnerships there. And it's so volatile. When they have a bad reporting, it goes crazy. But then when they have a good one, 30% in one day, like, can't predict that stuff.
I'll tell you another stock that nobody's talking about right now that I think is on a very, very long trajectory upwards. And that's going to be big commerce. And a lot of people would say, Dylan, are you crazy? You're betting against Shopify and actually enabling Shopify's competitor. I tell everybody, go look at the Gartner Magic Quadrant because these people know a lot more than I do. And you actually have big commerce directly right there with Shopify competing. And then it's just like Sentinel-1 and CrowdStrike. People always have this recency bias. Space. Yep. They think that the first mover is always going to be the winner, but there's a major second mover advantage to try to pave a different path. So when you think about big commerce, they ended up running up about 30% as well from this latest earnings call. There's a couple big things that we're seeing here with big commerce that right now they're experiencing accelerated revenue growth. And it's not even just this latest quarter. It's going to be over the past, I think when they first IPO'd, they said, because I ended up following them back in 2020 when they first IPO'd, and there's a whole bunch of speculative euphoria because Shopify just rallied, you know, 1,000,000%. And then you get BigCommerce coming IPO and they're like, this is the next Shopify. And then everyone dumps on into the stock, runs it up to $140 per share. That's why you see BigCommerce's chart look like that. It's because there's a bunch of euphoria around e-commerce stocks at that point. But BigCommerce right now, what they're doing is that they are, they have an international expansion. They're doing like this multi-storefront right now where they're going to enable the same merchant that they have to run 2 different stores underneath one single platform that they have right now. And that it's really interesting to actually see that their year-over-year comps during 2020, they grew about 35% year over year. Their latest earnings report had them growing at 49% year over year. And this is the reason why this is the most interesting is that we ended up seeing Shopify and we ended up seeing AWS both miss expectations and produce much significantly smaller, not AWS, you know what I was saying, Amazon's marketplace.
You're right.
They ended up producing significantly less, like a contracted growth, but BigCommerce actually accelerated and beat their year-over-year comps for 2020. That to me was the most interesting, and that has to do with the uniqueness of their business model and their differentiator, because they're more focused on the enterprise. So Shopify is focused on the SMB, and 60% of Shopify's revenues actually come from Shopify services, not necessarily their e-commerce website, where BigCommerce is only an e-commerce enablement website. And they have, I think they said, don't quote me on this, I want to say it's about 70% of their total revenue and enterprise customers. So they're significantly more focused on enhancing their capabilities to be more robust.
So, and I haven't looked at the comparison since they went public, when there was a lot of hype about both. Wouldn't you say that Shopify has a much higher gross margin because a lot of their stuff is based off of their services, their shop capital, shop pay, their investing arm, all their different things, their partnerships with Pinterest, Walmart, Amazon. I think they're running like 70% more gross margins. Don't quote me that on either, because I haven't looked at the earnings since last week. But I think when I looked at BigCommerce was like in the 50s.
It's 80%.
80 now. Okay. So
yes, they've seen gross margin expansion as well.
Okay.
So not only is their gross margin,
so that's
not
interesting.
only are they accelerating the revenue growth, but their gross margin accelerated as well. Well, I should say expanded from about 70% up to 80%.
Okay.
From 2020. So
interesting.
The whole business, since they IPO'd and since they ended up getting the cash on hand, doing the international expansion, continuing to scale, making
they have a
partnership
with Mercado Libre.
Yep, and
that was what interests me. I said, okay, so who's shop going to partner with? Are they going in with Amazon or are they going in with C Limited now to because C Limited and Mercado are definitely fighting for LATAM. I thought it was really intriguing and interesting where C Limited went into Poland out of all places. It went into Poland, and then the next day it went into Spain. And I think the next day it went into France. I was like, well, that's odd. Okay.
Man, I don't doubt C Limited. That's a 3-headed gross monster.
Oh yeah, no, it's my 5th biggest holding. And I have not held it as long as my top 3 or 4. Talk to me about I know that conviction's not bought or borrowed, but get me interested enough to do DD, due diligence and research on SI and that company. I believe that's the crypto company, correct?
Man, you chose a great company for me to talk about. I won't sell you on anything, but what I will do is I'll talk about the business model and see if this could interest you. How about that?
There you go. Let's do that. Yeah, I like that better.
So with Silvergate, this is actually one I've been following since 2020 when it started moving up pretty quick. And then it started going up and up and up and up. And then it right there around that bubble, I'm just going to start calling it the COVID bubble, because there was a bunch of speculative stocks that just ran up way past their fundamentals and it popped. A lot of investors got hurt, me included. But with Silvergate, when when at the bottom of the May correction with growth stocks, it ended up getting around my buy point, about $70 or $80 per share. And currently, that's where my dollar cost average is now. And currently it's trading up to about 200 to 220.
Oh my
So
gosh.
major returns here just over the past couple months. So I ended up doing
Do
a
you
write-up
agree that
on,
that's not normal?
I don't know. I don't think that it's normal, but it seems to be a pretty common occurrence, especially if you can find out these, because Upstart did the same thing.
Yeah,
Digital
I'm
Ocean's
blown
doing
away.
the
I'm
same
I'm
thing.
blown away about that one too.
Yeah.
I mean, you take it back 2 years, and it was few and far between a stock would go 300% in less than a year.
Yeah.
Um,
I think it's up 750% right now. Upstart is.
oh my gosh, I missed the boat on that one. Missed the boat on that one. I know I saw enough FinTwit love on it. I think I got to start putting a little caveat on my, I know I'm trying to shrink my portfolio, but if I see enough people talking about something, I probably should at least give the chance to look at it. That's why I'm not in at Palantir at a cost basis of $9. Instead, I'm at a cost basis of 25.
Me too. I'm at a cost basis of 25.
Yeah. But anyways,
So,
okay, so let's go to this business model.
Silvergate. So what they are is they're a bank, right? They're a federally insured bank. So they're part of the Fed, but they're a fintech at the same time. So what they've done is that they've actually created what's called the Silvergate Exchange Network, the SEN, S-E-N, it's the SEN. So I'll refer to it as that. So you have two components of their business. You have the normal bank that is able to really stabilize a lot of that volatility out of the stock. That's why you don't see it running up and down with Bitcoin, right? So with Silvergate, you have like lending, the home lending, you got personal loans, you got business loans. And so you can really just think of a bank and you can think about a portion of Silvergate's revenue, right? As well as their earnings, because they're a very profitable business. Their revenue is and their earnings have just grown incredibly. But then they have the SEN, and this is where it's the most interesting. Not too long ago, they just ended up announcing a partnership with Facebook's soon to be Meta, DM Coin, because Meta wants to go, Meta wants to do a stable coin that is going to be a lot like how Remitly works. But what they want is they want to be able to transfer currency cross-border all over the world on the blockchain, and they want to use DM to do it.
Mm-hmm.
Silvergate is going to provide the infrastructure to do that, right? Because on their Silvergate Exchange network, what they do is they actually work with a lot of the top brokerages, crypto brokerages, and exchanges out there. This includes Coinbase. This includes Gemini, Voyager. I can't remember all of them off the top of my head, but
You already
a
named
lot
the
of
two
those.
biggest ones, so.
Exactly. So they work with all these guys, and what they can do is they enable the transactions, the 24/7 transactions, when you are exchanging either from dollars to crypto or crypto to dollars or crypto to crypto. So essentially what they're doing is they're creating, think about it as like there needs to be a highway, right? From people to
Right.
get from point A to point B. They're creating the infrastructure for people to get from point A to point B in a secure and compliant manner. The uniqueness of the SEN infrastructure is the more people that are on it, the more people need to be on it, because now you create an invaluable competitive moat because other people are on the SEN infrastructure. If you're on the SEN infrastructure, that means that, and if you want to be in the crypto game, you have to get on the SEN infrastructure. In addition to that, too, they also create a very, very unique opportunity for institutions to invest into crypto and actually have a safe and secure way of doing it, storing it in a bank
So
backed by the Fed.
what's the difference between them and Coinbase? Because I know that's what I've heard a lot about Coinbase is, hey, we're FDI insured. You're investing in a stock. You're not investing in the actual coin. And you're paid on the transactions, both selling and buying. So walk me through just what are those differentiations between, or the same business model essentially?
Dude, Coinbase uses the SEN. Does that make sense? So like,
okay, so the SEN is basically
they do not compete.
the picks and shovels that enables Coinbase.
That's it. That's exactly what that is. Yes. because they're the picks and shovels, but I mean, oh gosh, and I wish that I could actually talk more about this because it's been so long since I've looked into the business model, probably a couple months now, but it really is just like this connected highway of a bunch of institutions that are able to send and receive cryptocurrencies to each other.
Okay,
That's the
so
whole
the bet
point.
is that crypto is here to stay, which, we'd most agree with. Some people still like to argue that point, but the long-term thesis is reliant on crypto and conversion from cash to crypto needing to be around, right?
No,
Because,
the long-term thesis is that people are going to need a bank to store their crypto in. So the
but
long-term
if
thesis
crypto's not, if crypto is no longer, then where does this stock go?
well, you still got your bank component, right?
So then it
But
becomes like a normal bank, basically.
so if you want a way to make a play on the government regulating crypto,
There's just,
Silvergate
yeah.
is the bank, and it is
Okay.
the ticker symbol to do it. So if you think that if you believe in crypto, right, and if you think that crypto is going to have to be regulated one day, and then there's a longer term opportunity here that if they do come out with the Fed coin, that Silvergate is in a very, very unique leadership position to host that stable coin on the Sen. So the play is on regulation of crypto. The play is crypto yielding for being an important use case in our society long term, and more importantly, stable coins, Facebook's DM, and then even potentially the Fed coin later on down the road. So that's what Silvergate is,
Are they
and
founder led?
they are. I think so, but they were actually founded in the 1980s. So
Oh wow!
this is a
I'm
banker.
sure. I'm sure the guy who found it wasn't thinking about crypto.
He was. That's the uniqueness, is that he's been in the banking industry for so long that he ended up coming across crypto, and they just started investing into the Sen around 2010. And they said, there's a
Wow,
thing here. 2010. No, 2015 when Bitcoin first came out. So they ended up noticing that crypto was a big thing. And they said, this is going to disrupt the entire financial industry. We need to start making investments into our infrastructure now to take advantage of this.
well,
And
that's
that's what
very forward
Silvergate
thinking.
is that they're a leader in this category.
So we're coming up on an hour, but I still want to talk if you got time. Well, we may have to cut this up into 2 episodes. I see you have one of my favorite tools in your stocks, and this is where it gets dicey because I already have so many positions, but you have a fun portfolio, and you've already got me wanting to do some more homework. And I know this product kicks ass. Is ZoomInfo. ZoomInfo makes a phenomenal. You work in sales, you probably use ZoomInfo.
Oh, yeah.
I use ZoomInfo more than Salesforce because it's so accurate on contacts and data, and it's easy to use. You partner that with the private company outreach, and you can automate your email campaigns, your call campaigns, calendar. It's what every salesperson wants, right? How do I find out and get the most accurate contact? And I can get an org chart, right? Like in other departments. I'm not surprised that they're growing so fast. I'm actually shocked they're not growing faster because the product's that good.
Man, this is just one of those stocks you just can't overthink.
Yeah.
Every single time somebody starts they're like, why should I buy ZoomInfo? And I said, they're growing 50, 60% year over year, and they're profitable, and they're a software company, and they're a necessity to salespeople.
Yes.
And this means that you are absolutely enabling the business driver of your business. It is directly aligned with the revenue goals. And that means that it has this deep, 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 sticky competitive moat that you cannot get rid of. Once your sales force starts using ZoomInfo in the first place, you can't get rid of it because your sales force decides that we want this, we need this, it's very valuable for us, it saves us time. We can go out there, we can sell, we don't have to prospect, we don't have to dig for information. It's just right there, boom.
That's right. Do you know they have that new Chorus acquisition where I thought this was futuristic, where when you're doing Zoom calls like this, it will read the facial expressions and everything that your customer is making and give you an analysis of how interested they really were on what you were talking about. And I just thought, wow. But you're spot on. It's definitely one that's a more simpler, and I like those simple theses. I appreciate the straightforwardness of some of these companies where it's like, okay, that's a trend that's not going away, right? If anything, my whole thesis with them was, once again, I only have a couple shares at $46. I should have just loaded the boat. I knew, it's going up. Is that they probably won't be their own entity for long. I would have to think that either Microsoft or Salesforce is like, they will be a competitor to us if they get an arm of a CRM. If they merged with HubSpot, could you imagine the disruption that they would cause?
They're partnered with HubSpot. I just listened
They partner, but imagine having a CRM with that kind of data and that kind of technology, right? Yep. Because Salesforce, to my knowledge, and they have a lot of tiers of Salesforce, but what I've seen is at the end of the day, it's up to your sales reps to keep their contacts up to date. If you have reps who don't want other people to know that, hey, this is my real contact, or this is, and they don't, and the turnover rate in that territory happens, your data's, your accuracy is only as good as your data is upkept, right? And so with ZoomInfo, they do a really good job of keeping up to date on those contacts and validating that.
On their latest earnings call, they did end up mentioning that they wanted to be used on top of a CRM. But I think it's very, very important that the CRM is made for the leadership team. ZoomInfo is made for the rep. The rep wants to use ZoomInfo because it drives.
Well said. That should be like their slogan. That was well said. The CRM is used for the management team because they're the ones digging into the forecast accuracy. We live this, right? We live this. You call the ball. Hey, what deals are coming in? Like, they live in that, but sales reps live in the ZoomInfo world of getting to the right contacts. And, we're all living in 90-day cycles, right? As a salesperson. I just like how you said that. Sorry, I cut you off. I could see that on a t-shirt. ZoomInfo is for sales reps. CRM is for leaders.
And they did say that they wanted to be used in, like, on top of a CRM. I think that that could be a potential later on down the road, but I think that they're in a different business. And I think that it doesn't matter. I think some people are concerned about LinkedIn, but I've used both. And LinkedIn doesn't come close to talking about like where ZoomInfo is. Like, it just provides so much useful analytics and information and data. And more importantly, the org chart is right there. Mm-hmm. So like, let's say I have some white space opportunity in one of the accounts that I'm working in right now. I can just pull it up and just be like, oh, wow, they're probably somebody I should talk to. Then you can just reach out to them right there. You don't have to dig through LinkedIn. You don't have to do any sort of weird customizations. And some people don't even have LinkedIn. Like, a lot of people that work in IT, like engineers, they don't care about that.
They don't want to be found. They don't want to be bothered.
LinkedIn is made for salespeople and recruiters. That's what LinkedIn is made for.
Yeah. I would. It's so fun to talk to a fellow sales guy. Man, you definitely have. I hate how diverse our portfolios are. You have me having to do a lot more homework and trying to see which ones of these I'm going to be adding. Let's maybe bring up my portfolio. Let's see if some of the ones that are not in yours, and we'll just, not that I'm going to sell you.
That's all right. Ginkgo Bio.
So I gotta know. I mean, all my listeners want to know this. Why do you not hold Nvidia?
I think Nvidia has got a really great long-term thesis, but there's very few companies that I'll actually buy when they're over a certain market cap. So it's not that I understand that Nvidia is going to be something great in the future, and could it be a $10 trillion company? I think that's probably the company that can do it. But a 10x stock in the microcap world is me buying. So I ended up buying Agrify at a $200 million market cap. I just needed to go to $2 billion. right? So I typically take a Peter Lynch approach because he did the same thing. And
Mm-hmm.
I just really try to buy stocks under probably about a $20 billion market cap, with the exception of Palantir, because I think that Palantir can probably be a $10 trillion company and it's a $50 billion market cap. So that's
That was
all
the
I
first
think
thing that
about.
jumped out at me about your portfolio.
Yep.
My portfolio looked a lot like yours early on. And it's kind of morphed as time's gone on with my winners winning. I just think from a stability standpoint, I go back to, I made this tweet I hand wrote about having a checklist, right? How do I compare stocks and who stays, who goes, who do I want to over index on, because I'm just so convinced of conviction, and having a scoring system. So I named it the World Changers Scoring System, because I think there's certain things that aren't quantifiable, right? That you have to take into consideration. I think you would agree that I've heard you talk about, you have to have imagination.
Yep.
We're not investing in today. We're not, right? If you were, you just go out and buy Apple and buy a whole bunch of things that is eventually, going to slowly go up and it's not going anywhere. But we're investing in the future 10, 20, 30 years and what our world will look like. And Nvidia, if you were to go back 28 years ago when it's a graphics card company, to say what it's become, there was no telling. You would have to have imagination that they would be getting into the semiconductor world, getting into AI, getting into robotics, getting into genomic, all these different things, getting into gaming. So now where does that leave us? And if you watched last year's GTC conference, Jensen's giving the keynote tomorrow for this year's. You could never have predicted all the different things they were launching with having a DPU chip where they have data, networking, compute, all on one chip, a data center in a box, fully built in with zero trust security, right? I mean, if there's one company I could think of that has the iRobots, if you've ever seen that movie, that come out and they create and they, do your laundry. I've always wanted a robot that can just do my chores for me. This is the company, and so, and the fact that they have 17 car manufacturers using NVIDIA Drive, I do think that they, and Tesla kicked them to the curb because Tesla wanted to do their own. I definitely think they're going to be playing a relevant position in our world all around from all facets.
Yeah, and I absolutely agree, but it's the same reason why I still don't own Microsoft. I still don't own Google. And even though these stocks I think Google is actually up about 100% this year because stock buybacks and just awesome execution. So I think that a lot of these other stocks, I mean, yeah, they're performing great. And don't get me wrong, I'm not bearish on Nvidia at all, but it's the same concept as why I don't really own any large cap tech stocks at all. Like I don't own Amazon, I don't own Microsoft, I don't own, just because I want that 100x 100 bagger opportunity. Like that's what I want, because that's what's going to change my life later on down the road, by getting Upstart and just letting Upstart sit. It's going to be a leading AI company one day too. Right now they're just an AI lending. But one day it's not. I actually posted on this on my Substack earlier. I said, people don't understand that Upstart isn't an AI lending company. It's an AI company led by a Google executive. Like that's what it is. It's starting off as an AI lending company. And he's multiple times mentioned that we want to get into other areas of AI. So it's an artificial intelligence company. I think Upstart later on down the road is going to be a lot different than what we see it as today. And I made a bullish statement one time, and this is when it was like a $8 billion market cap. I said, one day Upstart's going to be a $300 billion company. And I still believe that even to this day, because that's what I'm looking for. I want to buy those new IPOs like Global E that has the opportunity to just close the entire world. That's essentially what they do, is they enable cross-border e-commerce. So there's a massive opportunity for upside later on down the road.
But do you think that they get to grow that far before someone says, "No, you've grown enough. We're going to just buy you because it's going to be cheaper for us to buy you than build it"?
Yep, and that could happen. That could absolutely happen. But then that's when I'll just sell. It's really active portfolio management. I'll cut stocks. I think I cut stocks faster than a majority of retail investors do.
That's actually a good question. I was going to ask you, like, how long what's your time horizon? How long do you hold stocks? That kind of thing of, what's the goal, right? I talk on my show a lot about know thyself, and you obviously have a goal in mind, a mission, a thesis, a process that you stick to. I mean, right off the bat, when I looked at your portfolio, I was like, man, he has some young guns that have just blossomed quick. And walk us through what the goals are and how you think through that, because I think a lot of investors just look at FinTwit and they see what everyone's saying and they want to jump on it, but there's no real goal in mind. Like for me, my goal is 10 years from now, I don't have to work in sales. I can take a 75% pay cut. I can start my own investing service, whatever. And even if it doesn't pay a lot, I'm financially independent and I get to do what I love most, is having Zoom calls like this and just telling people and helping them learn they can make their money work for them and start now. It's, the time is your friend. And the sooner you start, the power of compounding will change your life. It's so sad that you're 30, you got 6 years on me. I got all this gray hair from being a manager before. And, I have some friends who are 20 years old knowing about stocks. And I wish, during that time I was index fund investing, which is still something, but, I could have easily, already been retired had I had that thought process in education.
Yeah, I think I might end up, I think I have the opportunity to retire in the next 5 to 6 years, realistically. I live a very conservative life. I got my fiance here. We don't have kids yet. So I can really just put a lot of money away into the markets and just grow my portfolio. And I've really created, like how you mentioned before, a very defined stock picking strategy, where this defined stock picking strategy is absolutely focused on in-depth fundamental analysis and compounding. We might be in a bubble.
Yeah.
There's a very strong chance that right now our market is in a bubble. It's looking very bubbly. And I think that's very important.
But I don't know about you. I'm not going to pull out because
I'll hedge my portfolio.
I can't time it. I don't want to time it. It's too stressful. I will say today gave me a chance where I almost thought about trimming trade desk and just saying, you know what? It's probably going to go back down 15%. I'm going to sell it all and buy it all back cheaper. I'm like, why? What's the point? Like at the end of the day, if I believe this company is going to be a multi-$100 billion company and it's only like a $40-50 billion company, after today, I don't know where it stands. Why does it, sometimes it's more stress than not trying to in and out. I know traders, I'm like, the statistic is 80% of traders quit. I think it's actually maybe 90% after 5 years.
It's some obscene number, like 1% of traders is actually profitable.
Yeah.
So that just tells us like how in-depth FinTwit. I consider myself as a trader, but I actively manage my investments. That's why I trade stocks, right? I do not swing trade. I do not think to myself like, hey, the chart looks like this. I think it's going to go here. I'm not going to look at some historical reference to try to get an accurate depiction of the future. No, you have to make sure that you understand the fundamentals, right? Understand the fundamentals of the company. You get a really great idea of what's going to happen in the future, right?
So why do you say you're a trader? Because how long are you holding these stocks?
So I'm holding a stock with the anticipation on holding it to be the next Microsoft, right? That's what I'm holding it. That's what my intention is.
Wasn't that investing though?
That is investing. But the reason why I say that I'm a trader is that I do make a lot of adjustments to my portfolio very, very frequently. Like it would be very difficult. What would be
an example of that you made an adjustment?
So I think Pubmatic is a really good idea. So I originally had Pubmatic at a cost basis of like $35 or $36.
Okay.
But I sold that stock to Tax Harvest to collect because I don't want, so I usually make money trading on any given year, but I don't want to record any of that. So I record my losses pretty quick. So I'll record my losses, let it, especially if I think the chart looks a certain way to where there's a lot of overhead resistance, and I'll let it actually go 30 days, let it trade sideways, let it figure itself out, create that base, and I'll re-enter the position again. And that's just from a tax perspective, because
Okay.
I have my income. I always have to pay Uncle Sam in some money because, you start making some more money, and then you have you have untaxed realized gains, and you're, just basically selling stocks and everything like that. So I take it, that's the 80-20 rule, right? 80% fundamentals, 20% technicals, but it's also 80% investor, 20% trader. It's
But what
very
if you
much
had it in
so.
a Roth IRA where you weren't getting taxed?
So I have a taxable brokerage, and I also have an IRA right now. And I don't know why I haven't started in a Roth IRA. Probably
That would be my recommendation to you. You
Yeah.
gave me a lot of good feedback and tips. I would say most of my money is tied up in a Roth, because with a Roth IRA, a couple different things that people don't know. You can actually use it for your kids or yourself for college,
Really?
not taxed. So you can pull it out early. So that's for my kids' college fund. Their college is already paid for. Although we don't know if they'll go to college now after the way our school systems are. You can almost learn everything on YouTube, and maybe
Right.
maybe they get a house from us, because you can also use it for a first time house purchase. And not
Give them $10,000. Teach them how to trade stocks. How to
yeah,
pick
right.
stocks.
Exactly.
In 5 years, they'll be good.
I'm already. My kids are always coming like, "Daddy, are you doing stocks again? How boring!" I'm like, "Trust me, you will want to learn this early." And I was like, if LOLs weren't private, you would be buying them. That's what I'm in LOL and Spider-Man zone. So they did have some Disney, and I didn't tell them, but I sold their Disney for Palantir. So
It's probably a good move.
Yeah, I thought it was a great move. I felt guilty as heck, but I was like, nah, Palantir's gonna outpace Disney in 10 years. But yeah, I mean, having a distinct style, and for me with the Roth is, I don't plan on touching this. That's what gives me peace. I don't plan on touching this till I'm 59, but I do have an individual brokerage account that I do want to touch earlier and pay tax on. I'm okay with that. But I have a balance, because I know the interest rates. I don't know. I hypothesize that the interest rates will be much higher when I'm older. And I just don't want to pay tax on that. I'd rather pay tax up front,
Oh man, that's for a whole nother discussion.
Yeah.
I can talk to you about macroeconomics, and
You'll school me there. That's not my wheelhouse. But definitely we can save that for another time. Well, I don't want to hold our viewers up. We said we were going to do only an hour. I don't know how long we've been clocking, but we will definitely do this again. I could talk to you about stocks anytime. And I know we've been on some of the longest Palantir Twitter spaces and Digital Turbine. I've really enjoyed this, Dillon. So for those of you guys who are not following Dillon, please do so. Get on FinTwit. It's at BluSuit Dillon. So BLUSuit DILLON. And you'll see a lot of great commentary and following of different stocks. And he posts a lot. Also, if you want to plug your Substack as well.
Yeah. So what my Substack really is and I got a YouTube channel as well. And that's just really a way for me to visually share my research. But what I like to do with Substack is I like to give people an opportunity to really consolidate the amount of time that they spend looking at a stock in the way that, if you liked my investment style that I talked about here today, that is the quickest way for you to get access to that, right? So I spend hours and days doing research on these stocks, developing a business thesis, talking about the fundamentals of the company. And usually it's consolidated in a 15-minute, easy to read, usually tells a really great story thesis, right? And then in addition to that too, I often post about trading strategies as well as portfolio management strategies and general macroeconomics. I've noticed that there's not many people that are interested in that, so I may not post that too much more. So I may stick with portfolio strategies, trading strategies, and new stock ideas. That consistently is one of mine that a lot of my members currently. So I got a couple hundred members now at this point, so you wouldn't be alone. And then thousands of people who currently follow my Substack at the same time. So if you guys really like the idea of finding new, young, growing companies with a strong fundamental thesis with growing revenue and earnings, I highly suggest you at least check out my Substack.
And I would second that. And also too, um, macroeconomics are important as well. Not that for those traders, obviously they're paying attention to when things fluctuate. But we talked about it in the beginning of the show. Buying a stock in a heavy position that you're building at $25 a share versus 50, there is a significant difference if you're holding that stock for 20 years from a compounding rate, right?
Yep.
So even though I know you hear a lot about, with long-term investing folks, that it doesn't matter when you buy in of that, if you're holding it a long time, it's going to outperform the market. It's going to give great returns. But there is a concept of overpaying for something. That's why we have valuations. Don't get too caught up in valuations, because I think sometimes it's okay if something's considered quote unquote overvalued.
Yeah.
Right. Because you want to look at your time horizon. You want to look at what the optionality is. There's a lot of things that can't be priced in. I think there's a lot of new products that Palantir will have that are not priced in. And there's a lot of other expansive capabilities, right? So just be careful of not getting stuck in this valuation bubble. But at the same time, I'm learning this as I'm growing as an investor. I'll give you an example. Is when trade desk at 69 on Friday, I was just kicking myself because I had a little extra money in my account, and I was like, for my paycheck, I was like, why don't I just buy that? I know this goes and fluctuates, and there is not one thing that has changed from my thesis. Jeff Green is an extremely smart young man, proven CEO, and he's not going anywhere, right? And so when you see those stocks and you see the overreaction, it's like, that's your conscious, like, okay, and I struggle with this because I want to get Palantir to my number one spot as soon as possible, which I kind of have to weigh, like, okay, since my time horizon is maybe not the same as yours, I want to hold 10 to 15 years. Do I think Palantir is going to outperform Trade Desk in 10 to 15 years? Yes. So that's why it's going to Palantir. So it's a tough, you have to really find a process that works for you. But once you do, you just do the homework, build some investor friends to follow and meet, and keep up with your thesis and take notes, journal. I look back and I found some old journal notes of what my account was back in 2019. I was like, holy moly. I was like, I couldn't believe it. I was like, you're telling me that my money had grown that much? And of course, my wife says it's fake money because it's not, can't touch it,
Depends on if you're asking Janet Yellen or not.
Yeah, right. Yeah. So that's a whole nother conversation.
Yeah.
Oh, man. Well, I have had just such a good time. Hopefully our listeners had a good time too. Please follow Dillon. Subscribe to the podcast as well, Dominating Your Investments. Remember, it's never too late to dominate your investments and to get started today. Thanks and have a great day.